Hey, what's up guys? Welcome to the Accelerated Weekly Training. So today we're going to be going over efficient entries and what I consider to be the correct use of stops for those entries. So anyways, without further ado, let's go ahead and go over the disclaimer real quick. Pause the screen if you need a second to read it. If you haven't seen it before, it just goes over and explains that this is all for education, that this is not a financial investment or recommendation, trading advice, or any such other advice or recommendation to purchase anything. It's specifically for education and entertainment value. All right, so now that being said, let's go ahead and switch over to the charts. All right, so this was, I forget what day this was, 7-8. So this was Friday. Okay, that's when we were looking at this last. All right, so Friday's price action. So I know this is going to seem a little bit, with the benefit of hindsight, but once I dive in, I think it'll make sense. And we went over entries on Friday. I'd have to double check on that, but we went over part of this, and so I'd already kind of mapped out the beginning of this day. But I will do another one in the future where we'll kind of lay things out as they're happening so that it becomes quite apparent how this works in real time and not just in hindsight, because I know a lot of people can use hindsight, old charts. You can kind of fit and mold any specific pattern or desirable price action into this theory and then essentially make it look a lot better or a lot easier than it is, and that's not what I'm trying to do here. So anyhow, let's just quickly go over the price action, what happened through the day, and then what would have been the most strategic way to enter in the market and where we should put our stops and where we should not be doing those things in order to be effective and to be going with the along with the price action itself and following the market. All right, so essentially we've been in this uptrend here. We know that the NASDAQ is in a downtrend, and so this is essentially the market broke through one of the longer one of the daily charts down trend line, and so we are now having momentum to the upside. So now we're tracking that and just watching price action to see how that unfolds, whether or not we're going to get a larger move to the upside or whether or not things are going to kind of fail back down to the downside, right? So we can see that the value area is moving higher each day. We identify that through the point of control and the value area itself moving higher on each subsequent day. And so on Friday, what happened was essentially we had opened up Friday morning inside of the value area, and price began to consolidate. So we were watching that price action to essentially see what the market was going to do next. And so what ended up happening was after the open, price broke down, essentially found support at the so this would be Thursday's value area high, and then was rejected to the upside. It tested the POC, rolled over one more time before ultimately breaking back up through that consolidation and then to the upside, which is quite a bullish maneuver. If you're paying attention and are not getting caught in too much of a directional bias intraday while it's happening, then it's something that you can anticipate and flip and reverse your position and end up with quite a nice profit on the day. So we saw that it broke new highs and then pulled back all the way to the low edge of the developing value here, and then broke out higher again before the day ended. So let's take a look at that in the price action and see where it made sense to enter. Okay, so we can see here, this is our previous consolidation. This was a nice pattern on the 30-minute chart. I can pull that back up here. All right, so we have this consolidation here, which happened quite over several hours. And so when that happens over the course of several hours, we expect for there to be kind of a powerful move on the other side of that, right? As a lot of traders have gone back and forth between buying and selling, we found a price equilibrium, and then now it's time to break out of that pattern higher. So, or not necessarily higher, but break out in either direction in a significant way. So what we found was that price broke down, and so what I have done here is I've overlaid the value area high, value area low, and the market profile point of control over top of the price action here, just so we have that kind of on our chart as a reference point. We don't have to keep going back and forth since it's established. And so what we saw was we saw price break down, right? So price breaks down pretty vertically, not really giving us a decent entry. So there's obviously, you can try to capture some of the momentum here, but that puts us in a precarious position, because if we're trying to establish a full position, and that would be like multiple contracts so that we can scale off some profit, we essentially have a large gap of between where we would need to effectively place our stop versus where we enter, right? So if we're entering down here as price is breaking through in a significant way, our stop's going to be somewhere up in this general area, right, where it would make sense to the first level of support, or even on the other side of the value area, which would be ideal. That's most ideal, right? So price breaks down. So not really a good entry here. So as it's coming down, ideally, what we would want to see is we would want to see a pullback back to value, right? Now that doesn't always happen. And so oftentimes, depending on if this goes vertically lower and then we get a nice pullback that we can create an entry off of, or when price does have a sharp move lower, it can have the tendency to have a sharp move back to the upside, which is what we got here, which is what I was kind of targeting as I was creating videos and watching this stuff in the morning, was a pullback to value, point of control, value area low. Those things would be, that kind of general area would be a good area to enter, including the +1 standard deviation band for the VWAP, because this is essentially the outside of value of the developing value of the market at that point. And so price shouldn't extend in a significant way beyond that if we're going to continue to the downside, right? So that being said, a nice entry would be here with our stop on the other side of the value area, on the other side of the value area high, and just gives us a nice cushion to allow for price action and for price to work itself back to the downside after it decides that it wants to be rejected out of the previous value area, right? It'll move away from value, move back into value to test it, and then move away, right? So that's what we saw here. We had a nice move to the downside where there was plenty of room to be able to take off at least one contract, take some profit while we were expecting price to continue. Now we've got prices moved away from the value area twice to the downside, right? So you would think that's a pretty bearish price action and price scenario, right? So, but what we see is as price comes down here, it breaks the support, but then is not able to gain traction. So we would want to continue to see signs where price was wanting to move lower, and that's not what we see. So we see price break through this downtrend line, can't even test the low here. A poor low is made here. So this is really, really kind of crappy price action as far as if we're looking for solid momentum to the downside. And then we see price just essentially reverse and ultimately break through this level here. So if you're able to get a decent entry here, get a profit off here, then that's going to improve our overall average of the trade, and any loss that we take here is going to be fairly insignificant at that point. But what we're looking at is the fact that price has attempted to break down twice, completely reversed from the uptrend. It could not do that, and now it's breaking right through that consolidation to the upside, which is extremely bullish. So at that point, we should be trying to find a proper entry. Okay, now we've got momentum working in a scenario like this, and so we may have to take some more disadvantageous entries to try to get positioned, okay? But the price is moving vertical, and so we know, again, based on this trend line here, that this is not going to be a sustainable ordeal, right? So we can look for pullbacks like here to the value area high, to the +1 standard deviation move, because that's a pullback there, and then a continuation to the upside is going to show that price wants to continue higher, right? And so that's exactly what we got here until this trend line was broken. Okay, and then once we get to the trend line broken, then price starts to retrace. So we got, again, okay, we got the same deal. We've got a vertical move to the upside. What are we looking for? Probably a pretty good vertical move to the downside. And so that's exactly what we get. We get a pullback to the first standard deviation, and a little bounce there. Price ultimately fails back to there and moves all the way back through the value area, all the way to the value area low. Now, unless we think the market's going to completely roll over and this is just going to be one giant consolidation day, then it would not make sense to take an entry essentially in this area here below the VWAP and the -1 standard deviation band of the VWAP, which also includes our value area low of the market profile. And but because this was a significant move higher with pretty good volume, it's pretty safe bet that the market is still trying to move higher. It's just taking a break, right? So even if you don't take a full, because you're not convinced about price action, or even if you wanted to layer into it, taking some calculated risk in this area, looking for another move to the upside makes sense. And then this is quite low risk because, again, like I said earlier, the opposite, if the trend is up, the opposite first standard deviation band, which would be right here, is going to be kind of our line in the sand that we wouldn't want to see price action continue to move into. So if we're talking about entering in this area, our stop could very likely be right here. It would make sense logically, and it would make sense within the overall structure of the market. And so you could put together a pretty good size position here, having quite tight risk. And as price breaks the counter trend line here, and momentum is switched and shifted to the upside, that's exactly what we see with some easy, nice profit targets taken here at this confluence area and above and beyond. And then it kind of just tapers off. It doesn't really finish super strong, but it is it's a fairly good move anyways, especially in regards to reward versus risk. So I wanted to go over this because this is a pretty good day that kind of just explains how using the combination of value and price action, if you're paying attention, you're being objective, and you're not getting sucked into the price action itself when things get, when the volume starts cranking up and the market gets moving, and you take those strategic entries with the proper stop placement, and you sit on your hands when things aren't working, when price action and structure is not conducive to your strengths and your strategy and the way you should be trading. You can see that each one of these, if we took a late entry, ultimately we were taking heat on the trade, but if we were patient in our entries, then we took much less heat, and things ultimately would have worked out better for us. And the name of that game was just being patient for our proper setup. And so anyway, I hope you got some value out of that. Like I said, I thought it was pretty cool. I love those market reversals because oftentimes they're just ripping the face off of people that aren't waiting for it or not anticipating it. And oftentimes they can be a lot stronger than the move that we saw within this daily time frame. So anyways, hope you enjoyed it, and I'll catch you next time.